Holy smokes, ladies and gentlemen. Buckle up because what I'm about to tell you will shock you to your core. We are staring at a financial shift so monumental that most people can't even wrap their heads around it. The entire global money system, trillions of dollars locked in treasuries, bonds, and international transfers, is being rewired in front of our eyes. And sitting at the very center of this storm is XRP. Not Bitcoin, not Ethereum, but XRP, the digital asset that was literally designed from day one to be the backbone of institutional money movement. This is not speculation anymore. This is the real deal. This isn't financial advice. Right now, XRP is trading at $3. And people look at that and say, oh, it's not that crazy. I can wait. I'll pick some up later. That's the kind of mindset that gets you priced out before you even realize what happened. Because this isn't about hype. This isn't about meme coins. This is about the rails of the future financial system being laid down right now, with the biggest players on Wall Street and beyond already locking in their positions. And before we go even deeper, let me give you something that will completely change the way you invest forever. I put together the ultimate millionaire investor guide. Find 100x stocks, a complete powerhouse package with documents, images, video breakdowns, and more. This is the exact playbook you need if you're serious about finding those life-changing asymmetric opportunities. It's pinned in the comment below this video, and I promise you, it is absolutely irresistible. Alongside that, don't miss your chance to get free NVDA stocks worth up to $1,000 with just a $100 deposit on Moomoo using my link. Both are down there waiting for you. Take action. Now, let's get back into XRP because what I'm about to show you is proof of why $3 is dirt cheap and why the window is closing fast. Behind closed doors, the so-called blueprint for the new financial system is already sketched out. Imagine a whiteboard inside a private meeting of the world's largest financial institutions. At the very top, XRP ledger front and center, BlackRock CK's tokenized U.S. Treasuries OSG. Surrounding it, Ripple's RLUSD stablecoin. And connecting it all together are major banks like Goldman Sachs, Citibank, and JP Morgan with something labeled Nexus 247. Real-time, always on global connectivity. That's not speculation. That's literally the architecture of Finance 2.0. Think about it. The biggest asset manager on Earth, BlackRock CK, has already said outright that tokenization is the future. Larry Fink himself came out and said, every bond, every stock, every real-world asset is going digital. And Ripple is right in the middle of it. Tokenized U.S. Treasuries alone are a multi-trillion-dollar market. And when you plug that liquidity onto the XRP ledger alongside bank-grade stablecoins, you're not talking about 3 XRP anymore. You're talking about the foundation of a system that will settle quadrillions of dollars over time. This is why I keep stressing the concept of being priced out. Too many people confuse price with accessibility. They think, oh, as long as XRP isn't at all-time highs, I'm not priced out yet. Wrong. At 10,000 XRP cost you about $30,000. At $10, that same bag is worth $100,000. At $20, $200,000. And here's the kicker. Mass accumulation becomes mathematically impossible for most of the population once XRP clears that $10 to $20 range. That's when the door slams shut and retail investors are left looking from the outside in. And make no mistake, that's exactly where we're heading. Because for the first time in history, it's not retail leading institutions, it's institutions leading retail. In the dot-com bubble, retail chased the institutions. This time around, retail came first, dabbling in crypto, meme coins, speculation. But now, the institutional giants are stepping in. BlackRock CK, Citibank, Franklin Templeton, and they're about to build massive long-term flaws under this market. Flaws that retail can't shake out. Flaws that keep pushing prices higher while volatility compresses. Picture it. Trillions of dollars in tokenized bonds, stocks, and treasuries parked on chain, Liquidity cycling at speeds never seen before. Order books stacked on both sides, spreads tighter than ever. This is how markets evolve. When big money steps in, XRP isn't just part of the story. XRP is sitting at the very top of the stack. So, let's break this down with simple math. Say you're just getting started today. You pick up 1,000 XRP at $3 each. That's $3,000. Nothing insane. When XRP runs to $10, that's $10,000. When it runs to $20, that's $20,000. For a lot of people, that's life-changing money already. Now imagine those who accumulated 10,000 or 20,000 XRP before this institutional tidal wave hits. That's generational wealth being built in real time. And here's what most people don't realize. The majority of wallets holding XRP aren't massive. Only around 1 million wallets hold more than 1,000 XRP. Less than 400,000 wallets hold more than 10,000 XRP. That's it. In a world of billions of people, that's rare. That's scarce. And when you talk about the next wave of adoption being driven by institutions instead of retail, those numbers are about to look microscopic. And let's not forget Ripple has been building toward this moment for years. On-demand liquidity, partnerships with banks, quietly setting the rails while everyone else was distracted by meme coins and hype tokens. They didn't care about chasing retail pumps. They cared about solving trillion-dollar problems in cross-border settlement, in liquidity management, in treasury tokenization. Now that groundwork is complete. The floodgates are opening. You've got BlackRock TK leveraging tokenized treasuries. You've got Ripple minting RLUSD on the XRP ledger. You've got Goldman Sachs and Citibank connecting to Nexus 24/7. And you've got consulting firms like BCG calling for $16 trillion in tokenized assets by 2030. Even Krupp is forecasting trillions. This isn't a fringe idea anymore. It's consensus among the world's largest financial institutions. So, here's the blunt reality. At 3 XRP, you're sitting in a rare window that's about to slam shut. Once this thing clears double digits, mass accumulation is done. Institutions will build long-term flaws, and retail will be left chasing smaller and smaller dips that get shallower and more expensive every cycle. That's how wealth transfer happens. That's how the new 1% gets minted. And don't get it twisted. This isn't some far-off fantasy. We're already seeing shorts stack up against XRP, liquidity pools being built, and indicators lining up for a massive breakout. On the short-term charts, we're talking about swings into the 420 to 440 range as shorts get liquidated. That's the kind of upward move that triggers the next leg higher. The hockey stick curve that institutions love because it gives them entry points to build size while retail panics in and out. That's why I say it again. 3 XRP is dirt cheap, not just because of where it's going, but because of what's happening behind the curtain right now. The rails are in place, the players are at the table, the liquidity is being wired in, and soon the only question left will be, were you positioned, or were you waiting on the sidelines thinking you'd buy later? Before we dive straight back into XRP's setup, don't forget the Ultimate Millionaire Investor Guide. Find 100x stocks is pinned below. It's loaded with everything you need. Documents, images, video to help you uncover the biggest isometric opportunities in the markets. And right under that, grab your free NVDA stocks up to $1,000 with just a $100 deposit using my Moomoo link. Do not miss those. Now, let's talk about why XRP's next move is about to separate those who prepared from those who hesitated. The critical difference between this moment and every other crypto cycle is simple. Institutions are no longer experimenting, they are deploying. For years, the talk was about blockchain pilots and future use cases. That era is over. We're past proof of concept. Now it's real-world settlement. Tokenized U.S. treasuries worth trillions and stable coins issued by the largest players in finance. And sitting in the center of all those connections, the XRP ledger. Look at the velocity here. Franklin Templeton, one of the largest asset managers, already runs its U.S. government money fund on blockchain rails. BlackRock CK openly talks about tokenization being the next frontier. CitiRoute publishes research calling for trillions in tokenized assets by the end of this decade. And Ripple, they already have ODL. They already have liquidity corridors. And now they've introduced RLUSD, their own institutional-grade stablecoin, to plug directly into this new system. This is why the term priced out is more than just a scare tactic. At 3 XRP, you can build positions. At $10, it's already heavy for the average investor. At $20, it's basically done because institutions don't buy a few hundred tokens at a time. They build billion-dollar allocations and lock it up as part of global liquidity infrastructure. That's why you won't see wild volatility once the floors are in. Volatility compresses, the market matures, and the base price rises steadily over time. Retail will still talk about dips, but those dips will be at levels that most can't afford to stack. And let's be very clear, the tokenization of treasuries, bonds, and equities isn't some hype narrative. It's a financial inevitability. The current system is clunky, slow, and outdated. Settlement takes days. Liquidity is fragmented. Tokenization fixes all of that. And Ripple built its system to be the highway for this liquidity. The SDKs are live, the connections are being drawn, and the gates are opening. Imagine what happens when even a fraction of the 26 trillion US Treasury market goes on-chain. Imagine what happens when equities, funds, and bonds follow. That's not just bullish for XRP. That's a complete rewriting of how global finance operates. And XRP is in the perfect position to capture the liquidity flow because it was engineered for settlement, not speculation. Now let's touch short-term price action. Right now, XRP is showing strength on the 8-hour chart. Shorts are stacked, waiting to get liquidated, and the setup points to a big swing into the $420 to $440 range. Once that happens, you're going to see a wave of liquidations push XRP higher, just as leveraged traders scramble to cover. This is exactly how breakout legs form. Aggressive shorts pile in, they get squeezed, and institutions quietly step in to absorb supply. That's the hockey stick curve. It doesn't come from retail FOMO anymore. It comes from a massive imbalance between short-term speculation and long-term institutional allocation. And when that allocation is building, it doesn't leave. It parks itself in treasuries, in stable coins, in liquidity pools. That's when the flaws lock in and XRP's base price never looks back. Think about this. Multi-trillion-dollar stablecoin projections by 2030 are already out there. That's not me saying it. That's industry consensus. What happens when those trillions flow into real-time settlement networks? The rails carrying that liquidity become invaluable? And XRP is not only one of those rails. It is positioned at the top of the architecture diagram we've been analyzing. That's why 3XRP today isn't just undervalued. It's almost comically cheap compared to the system it's about to anchor. And when people say, "Oh, I'll wait for it to dip to $250 or $2, they're missing the bigger picture. You don't time revolutions. You position yourself before they break wide open. And here's the kicker. The wallets holding significant amounts of XRP are still a tiny fraction of global investors. Fewer than 400,000 wallets hold over 10,000 XRP. Do you understand how scarce that is? We're talking about a global population of billions, and fewer than 500,000 people hold what could realistically become life-changing positions. That is why I say you're not early. You're rare. And rarity is what matters when institutions begin scaling. The truth is simple. Once the next leg begins, whether it's triggered by a massive short squeeze, a regulatory breakthrough, or a BlackRock-level announcement, XRP will leave the cheap zone permanently. And at that point, people who ignored it at $3 will be begging for dips at $8, $12, $15, dips that may never come back. This is a historic turning point, just like the internet revolution where email changed communication forever. Ripple is doing the same for money. And while most of the world sleeps on it, you're here now connected to the information that the elites have already been acting on for years. So, let me hit you with the blunt reality one more time. 3. XRP is your chance to be positioned before institutions slam the door shut. You don't need to be perfect. You just need to be in. Because when this wave comes, it's going to be bigger than anything crypto has seen before. Bigger than the 2017 run. Bigger than the 2021 hype cycle. This isn't a retail bubble. This is institutional infrastructure, and the numbers being thrown around aren't in the billions anymore. They're in the trillions. Citigroup talking trillions by 2030. BCG projecting 16 trillion tokenized. BlackRock CK openly saying tokenization is the next big step for finance. Ripple integrating directly with these flows. This is the setup, so don't overthink it. Don't wait around hoping for another crash. Crashes will come, but they will come at higher and higher floors. That's the reality of maturing markets. And XRP is stepping into that maturity faster than anyone realizes. Before we wrap this part, let me remind you one last time. The Ultimate Millionaire Investor Guide, Find 100x Stocks, is pinned below. This package is the playbook you need if you're serious about capturing asymmetric gains. And right under that, grab your free NVDA stocks worth up to $1,000 with a $100 deposit on Moomoo. Don't wait. Those links are there for you, right?